Okay.
Hey, hello everyone. This is a member-only live stream to talk about the stock market. It's a rough day out there. The S&P's down, the Nasdaq is down, and some stocks are really getting beaten down. Microsoft announced their earnings, and one thing I listened to the whole earnings call for Microsoft, and I also listened to Meta's earnings call, and I listened to Google's, and I listened to smaller companies, all kinds of different companies. And I would say that, geez, the Microsoft earnings call, they covered so much ground so fast. They didn't have like a strategy or theme. And I thought to myself, they're just spitting out like, facts and figures, for 20, 30 minutes. That's all they did. And the market did not like what they announced. The growth for their cloud business was okay. It was a little lower than I think investors would have hoped. And the investment is pretty substantial. But I think Microsoft lacks kind of like mojo. Like if you have a really good strategy, you could probably say it in like 2 sentences. Boom. Hey, what do you want to do? We want to do this, and you can kind of say everything is kind of around that. And the Meta call versus the Microsoft call, very, very different. Like there was a very concise strategy with Meta, where Microsoft, geez, it felt like, geez, I was reading the contents of a package for 20 minutes. And that was my feedback on Microsoft. It really sold off. I kind of sense that, I think Microsoft's products are getting a little old. I think their products most definitely could be improved or replaced by AI. If you think about Word and Excel and PowerPoint, Windows, all these other things. So markets really, really sold it off, and it caused the rest of the space to sell off. So Salesforce is getting sold off. ServiceNow, I think, really did try to impress Wall Street. I didn't listen to their earnings call, but I did read their earnings release, and their numbers looked okay, but they just couldn't get the market to believe in them. And that along with Microsoft is causing a massive sell-off in software again. So software, man, it's pretty soon going to be so discounted. So either the market's right or the market's wrong, and it's going to be a big opportunity. Stay tuned. We'll find out over the next couple of years. Looks like Shadow Guy is on. He'd like to talk about Lockheed Martin. I think that's a bright spot in the market. So we can take a look at that. Is there any stocks, Daryl, you wanted to take a look at today?
None specifically, but I was just looking at the market movers, and Southwest Airlines is up 18.5% right now.
Jeez, what happened over there?
Yeah, I don't know, but I'm seeing a theme here. Royal Caribbean is up 14.5.
Mm-hmm.
And then Meta's at 10. Norwegian Cruise Lines is up 8. Carnival is up 7. So if we played the Sesame Street game, one of these things just doesn't belong here. One of these things just isn't the same.
Mm-hmm.
Meta doesn't fit there because all of these are
the travel stocks
related. Yeah. Then we have TT. I don't know what that is. Train Tech. I'm not familiar. And then we have
industrial.
LNP. Okay.
Yeah.
Then I thought that was kind of interesting that some of these travel stocks are up pretty well right now.
Yeah. What is
technology's at the bottom of the sector list? Communication services with Meta in it is at the top.
Yeah. Yeah. I'd like to take a look at maybe Southwest, and then we'll look at Royal Caribbean. And the one news flash that I saw in Royal Caribbean is that their earnings were not as bad as expected. and that caused that kind of rally.
Uh,
Maybe I got it wrong. Maybe I misunderstood it. We can take a look. But geez, Southwest 18.69. Man, that is a really, really good number. All right. And so Meta's up 10%. It'd been kind of, it rallied higher and then lower. It kind of came down. Now it's up to 10%. That's great. That's the one stock that's kind of keeping me above water today.
mm,
All right. So let's take a look at Lockheed Martin. We'll look at Southwest, and then we'll look at Royal Caribbean. And the energy stocks are working today. I think the higher oil prices helping Exxon and Chevron. I guess the geopolitical tension with Iran is what's causing oil prices to go up. So that is interesting. And do you happen to know what is causing like big banks like JP Morgan, Bank of America, MasterCard, and Visa to rally today?
that's a good question. Let me look at the
Fed's holding rates.
financials. Financials aren't even. I mean, they're in the green,
Mhm.
but they're only up 0.5%, just barely, above staples.
Yeah, and
So,
I know the whole
don't know.
space. You could say, oh, the whole space is just up a little bit, but J.P. Morgan's up 1.5%, Bank of America
Yeah.
2%, Mastercard almost 4%. It's like, whoa, what's going on over there? That caught my attention. I was like, wow, that's pretty
Yeah.
good.
I don't know what's causing it specifically. I haven't really looked. Let me do a little bit of searching here.
All right. Looks like Ben 10 is on. Chime exiting the Galileo contract may be a benefits to its free cash flow. Fingers crossed. Interesting. Okay, so Ben 10, you want to look at BZ, HDB, and LILA. All right. The one going back to these big banks, the Fed is going to hold rates steady and kind of setting up for a rate cut down the road. And I was thinking, well, how does that benefit these companies? Do they get to charge a higher interest rate? And that's why they're catching a bid? I don't know. All right, I'll jump in.
I asked Gemini, and it basically just said it's recovering from the sector-wide recent sell-off. So I don't know if Gemini even has any specifics on why they're doing it.
Even Gemini doesn't know. Okay. All right. So let's look at Lockheed Martin. They announced, and the market likes what they announced. And stocks up 6%. Revenues are going up for the full year. It looks like they've gone up 5.6%. The P ratio at 23.5, and they pay a dividend of 2.18. Over the 1 year, boy, look at that. Over the last couple months, this one's really worked. It's gone up a lot the last 2 months. Over the 5 year, it looks good overall. You get paid that dividend, you pretty much doubled your money. The growth has been consistent, 5% in 24, 5.6% in 25. Let's take a look at their margins, see if they're expanding those margins. They're about the same, and they were better before COVID, and their gross margins have been lower than historic rates, and the profit margins are single digit. This is one of the reasons I I'm not in love with aerospace companies. They usually have cost plus contracts. They have, the government has certain rules that, you can't make big margins on us, but it is very reliable business. They kind of pre-order stuff for down the road, I think like 5 years down the road. So they know what they're going to make. But that's where the numbers land. This one here, Lockheed has not been performing over the last couple of years as good as other aerospace companies, but it looks like they're catching up fast. Analysts think they're getting a little expensive, 16%. And for 2026, growth is going to continue. Profit's really going to jump. It's going to jump 34%. That looks good. And the first quarter, not going to jump too much, but compared to the year prior. But overall for the year, it's going to go up substantially and then continue to go higher. So that looks good. So let's take a look at the debt level for Lockheed. So they do carry a little bit of debt, 21.7 billion. If we compare it to their EBITDA, it's under 3, so they're okay on the balance sheet. It's not a perfect balance sheet. They do carry some debt. Let me kick it over to you. If you can take a look at Lockheed, I'll take a look at their valuation on my side.
Okay, I'm looking at 5 years here and just trying to find a kind of a quiescent state for the pricing, and this seems to be about the best that I can do. Yeah, I think this is probably about the best
Yeah, it's a tough chart.
Yeah, it is. It's not like RTX over the last year, that's for sure. So that line over 5 years is around 460. They've traded below it this year as recently as July and August. They traded below it during the tariff, and they even were selling off in February along with some other. They're not considered technology by any stretch, but they were selling off along with the technology names. So if we go back maybe a couple of years, I did see this one peak. I'll just draw a line across there just so we and I will make it red, and I'm just going to place it about where they were in the high in 2024. So we're getting a breakout there today. So they've been trading below that ever since the 21st of October of last year. So now we'll pull in a little bit more, and they're trading above their 5-day. It looks like they've been pretty much riding that since the beginning of December. We had a couple days where it's below that 5-day, but other than that, it's just riding it up. The 21-day is moving higher. The 50 days moving higher. 200 days moving higher. We're getting a little stretched above that 200-day. So this seems maybe a little bit risky here at this point. They are overbought, and they've had a buy signal on the PPO since the 8th of December, and they're maintaining that. They still are on a buy. The accumulation I saw, let me go back that 5 years again. I see that accumulation is at the same level it was back in 2022. So it had been, in distribution, but it looks like accumulation is back to where it was in 2022. So that's kind of interesting. So, I mean, they're looking really strong at the moment. Let me save this and we'll look at a weekly chart just to see. I have a feeling it's going to be about the same. So we're overbought. We've been on a buy signal since about the end of December. Money flow is positive. This is a 3-year chart, so we have accumulation at an all-time high. Over this 3-year period, they've underperformed the S&P by 12%, underperformed the industrials by 12%, and they've underperformed their own industry group by 7%. So I think it's a little risky here at this point. I wouldn't chase it.
Yeah, those moves that move so fast, it does leave me thinking, boy, that's a quick move. It is a little risky. I think the stock's fairly priced. I think cash flows get us to the valuation of Lockheed, and earnings per share. I mean, I could price them in the 20s for a PE, but I can't do that with their margins. Their margins are tight. It's a good business. It's growing. It's going to grow 5%, 6% going forward. If you really want to own a aerospace company, well, I think the buying a couple months ago, now using the rearview mirror, looks great. But right now, I just wouldn't be all that compelled to buy. But those that do own the stock, congratulations. It's really been working. It's really been working. So good job. All right. So looks like Pierre wants us to look at Amazon. I think that's a good idea. They're going to announce next week. And Amazon and Google will be the next two companies that are going to tell us a lot about this AI trade. Two companies that spoke about the AI trade this week, Microsoft, Meta. And Meta did talk about how at the end of this year, they may be able to reduce their CapEx into the data center. Okay, that's
Who said that?
Meta.
Okay, thank you.
On the Microsoft side, again, that call was really confusing. They covered so much. I think if you listen to like 3 minutes of that call, you're like, whoa, that's like 20 minutes crunched into, a couple minutes. They didn't quite answer the question there. They continue to try. I think a lot of that communication, they were trying to sell the analyst on how good of an idea it was to spend that kind of money. So I think Microsoft, having gotten beat up as bad as they got beat up after their earnings, they're going to have to come back and say, we know you didn't like our CapEx plan. So before our next earnings, we want you to know this about our CapEx plan. I would bet that they're going to come out with something like that, similar to what Meta ended up, saying before their earnings. But Amazon and Google, these guys are big spenders in that data center, and they're also going to be potentially, for sure, Google is going to be a big beneficiary of the AI space. Amazon, they will benefit as well. Their businesses, their AWS business most definitely is going to benefit from the spend on infrastructure to do AI. So these companies are really important to watch. And as mentioned last week going into this week, I knew today, or I should say yesterday's earnings, they're affecting today, were going to be very consequential. Microsoft being really consequential, Meta as well. And Meta caused a rally in AppLovin and not Google, because Meta and Google are not the same, very different. All right, so we'll put Amazon on the list. For now, let's take a look at Southwest. And I used to fly Southwest all the time. Really like their attitude, really like their approach. They really hustled. I like that. Then they lost their mojo like 2 or 3 years ago, right? And somehow they just were not run the same, and they had a lot of trouble. It's good to see them back. This was like the best airline that investors could invest in for a long time. Now, why would an airline stock be up 19%? So they had very strong earnings, huh? So let's take a look. So they grew in the fourth quarter, they grew by 7%. And this is an airline that was, having trouble growing. 7% in the quarter. And these numbers, we can't really focus on these numbers because these are COVID affected. In 2020, the airlines basically shut down. And then when they came back, their compares were off of a number where you had the big COVID shutdowns. So I'm not seeing incredible numbers, but maybe I need to read the actual earnings, because 7% is okay, but not incredible. For the full 2025, they inked out a growth for the year. And looks like their gross margins are improving, but not near where they used to be. See, this is when they were like the best airline in the space, 32.9% gross margins, 11% net profit margin. That's when they were like the gold standard of airlines. And now they're not back to that level. I guess they're improving. Maybe I could go to the quarterly and see how the profit margins look. So look at that margin expansion. Maybe that's why the market's excited. Southwest is going back to being profitable. The other thing that they've announced is Southwest for the longest time was open seating, right? You'd check in as early as you could so you can get a place in line so you can get on the airplane and then pick a seat. Well, that's gone. Now it's assigned seating. And just like United or American Airlines, maybe that's going to create new revenue streams, and that might pick up the stock. So that might make a lot of sense. Hey, they're going to create more revenues with assigned seating and charging a premium for being at the front of the plane, charging a premium to sit on the window or an aisle, that kind of thing. So that is good. So two things, they're growing and they're growing their margins. That does look good. Take a look at their forecast. We've got a lot of analysts weighing in. And for 2026, it is going to have good growth, 10.5% growth. Profits are really going to expand. I guess that assigned seating is really going to make a difference. That's a big jump in profit from 79 cents a share to $3.24. All right. So that makes sense. All right. Good news for Southwest stock investors. Southwest is going to be more profitable, make more money. I don't know if they historically paid a dividend. They are paying a dividend. So that's good news. But you see where this has been on a real long sell-off, and it's good to see them back. So let me kick it over to you and see what the charts are looking like for Southwest Airlines.
Okay. I'm not so sure I would trust this rally. Let me add a trend line here. So I'm just going to run it from there. We're connecting 2 points. So they're breaking out above that trend line today. The thing that immediately jumped out at me was the negative divergence on both the RSI and the PPO. We have distribution, we have money flow that's negative and increasing. Well, I take that back. That doesn't get updated until the end of the day. So I'll have to revisit that at some point and see if money flow is actually increasing today. So anyway, this looks a little suspicious to me. I don't know if I would trust this. It is interesting that it's jumping up so high, but it may be because nobody wants to buy tech today.
Yeah, but I mean, Southwest is kind of discount travel, but it's
Yep.
still discretionary spend.
Yep.
And I don't know that we're in a booming economy. We're in an okay economy. Um, hmm.
Yeah. I'm not so sure I would trust this. I mean, let's just go back a couple of years. Um, so here's a pretty big extension over the 200-day, 22%. Today we're at 46%. Let's go back maybe a couple more years. I just don't ever see them getting extended that far above the 200. Even back here, they were up 39, so that's almost as bad, but that was 22. 21, we were coming out of the pandemic and everybody wanted to go somewhere.
Yeah.
So, yeah, I don't know. I'm really cautious on this. This just looks a little too much exuberance, in my opinion.
Yeah. Yeah. I am happy for Southwest Airlines.
Yep.
I like the airline. Good success story. The whole, going back, I don't know, 60, 70 years when they started, it was like a small player that came in and disrupted the market with a new way of operating an airline. They were very successful. The other stock that is having an incredible rise along, and maybe Royal Caribbean created the big rally in cruises. So they raised their profit forecast on strong demand. So I guess people really like cruises. I've never been on a cruise. I know
Oh,
some people
man.
love them.
Yeah, I love them. I've been on a bunch.
You get to relax and it's a real good experience.
Yep, it's a fantastic. I've only been on one cruise line. All of my cruises have been on the same cruise line, but they're a blast.
Are they?
Yep.
Food's good. Food's good. And
Food's good. You usually have to pay up for some of the restaurants if you want higher quality food, but even the buffets are nice. But to be able to sit down and eat a big old steak and it only costs you like $20 for two people, that's pretty hard to beat on a cruise.
yeah. I've never been on a cruise. And one of the things on my bucket list is taking a cruise up to Alaska
Yep, that's
and
I've
looking
done
at
that twice.
Glacier Bay. I've heard that's
Yep,
a really, really good
yep.
cruise.
It's absolutely beautiful.
Yeah, that's what I've heard. So that's the one cruise that I'd like to do. And the other one that somebody that I know, he cruised rivers in Europe on smaller ships, these low ships.
Yep.
He said he had a great time. And he said it was he'd done Europe with his wife. And he said that trip was as good or maybe it was better in some ways than going through Europe and going from place to place on your own. Because he said the travel was taken care of. You'd they they would they would dock in a bigger city, and then you'd get the day and sometimes 2 days in a city, and you had a place to sleep, and they provided. It's a small ship, so he said they provided like breakfast, but then you were on your own for lunch and dinner. And
Yep.
he said that was great because then you're in Europe. You want
Yep,
to go
exactly.
if you're in Italy, you want to go eat that delicious Italian food, or if you're in, whatever city, you want to go try the cuisine from that country. So
Yep.
he really had a good time doing that. And these guys are just killing it. Look at this, 393%. And that's because the compare is, well, it's partly compare, but look at that chart. These guys have been rewarding investors. Man, the cruise lines are killing it. I don't have a valuation on these guys. I'm not big into cruise lines. Let's take a look at some of their fundamentals. So P ratio 19 PE going forward. Even after that big run up, it's not a crazy PE. They are growing nicely. 9% for 25, and we'll see what their forecast looks like. They're producing cash flow. Gross margins 49%. That's pretty good. Back to before COVID, it's even better than before COVID. So I guess people are really paying up to go cruising. And their margins are better than before COVID. Looks good. Their cash flow isn't great. Their profit margins are good. So impressive. They're getting that kind of performance out of this business. They're fairly priced according to analysts. And looking at 2026, he just raised his guidance. So it's probably going to be better than 9% growth. Things are really come together for the cruise lines. And it sounds like with this one doing so well, it created a rally in the other cruise line stocks as well. So, wow, travel stocks are booming today. How does this chart look to you?
Yeah, I see Benton says he gets sick on cruises. My wife is a little sensitive too. And I never feel the boat or the ship move at all when I'm on them. I guess I'm kind of desensitized to it. So I feel bad when I hear people say they get sick, because I have never even come within 1 inch of getting sick on a cruise ship. And I've spent weeks on them. All of my trips together has been weeks. Okay, so we have a trend channel here that I noticed right off the bat that started in about 2022. And they have traded above the top of the trend channel at least this once. And remember, when I create these, I'm trying to connect the most number of points, not necessarily the peaks, but the most number of points. So then I just made a copy and drag it down to the bottom and tried to connect as many points as I could as well. So we've fallen out of this trend channel. We also fell out in 2025, but this was the tariff announcement stuff. But we are out of the trend channel at the moment. So let me just go into just 1 year now. They're going to have to get up probably another $40 or $50 to get back into that channel. They are getting into overbought territory today with this run up. The 50-day is underneath the 200. The 21 is above the 200 today and above the 50, but the 50 is below the 200. And the 50 is starting to move higher. Now the 200 is moving higher as well. They are into overbought. We're getting a buy signal today. I don't know if I trust that. And this distribution accumulation, like I said, that doesn't get updated until the end of the day. But the last few days, it has been on a little bit of distribution, and the money flow has moved back into neutral area. So I don't know if I trust this or not. I'm seeing a whole bunch of stuff in travel, and I just don't know if it's just because of what the market's doing today overall. So I don't know if I trust this one or not either.
Yeah, it's an unusual day where travel stocks are booming. And software stocks are just getting crushed, getting destroyed. And this is affecting semiconductor, not as harshly, but semiconductor selling off. Google's selling off a little bit. Netflix is selling off. Tesla's earnings, they're changing their car business to at least their factory in Fremont, California, where they were manufacturing the Model S and the Model X, I believe. They're going to make the Optimus robots there. So, you going to pre-order your robot, Daryl?
Not right now, but my wife wants one when they get more cost effective.
Well, if it could do live streams and, on early mornings when I want to sleep in, I'll just have the robot join you and
there you go.
Cover the fundamental analysis.
Some people say I'm a robot. So we probably work well together.
The Optimus robots. Now, what are people going to do with the robot, though? Is it going to clean your house? Is it going to...
That's what my wife mentions every time she thinks about getting one. As soon as them dudes can clean the house, we're getting one.
But then there's going to be the cost compare, right? Because like you can have housekeeping services, right? Like there's these small businesses that clean your house. They do a nice job. And I don't know that the robot's going to be as good as those hardworking folks that will clean your home.
Yep.
And you could probably pay them, I don't know, $100 every time they clean, or $200, however much they charge. And the robot, if it's going to cost you, I don't know, $50,000, $100,000, it's going to take a while to get the ROI out of the robot. All right. So we'll see what happens there. All right. So let's keep moving. Ben 10 want to look at BZ. All right. So BZ is Canzoon. Canzoon, together with its subsidiaries, provides online recruitment services in the People's Republic of China. The company offers AI-powered resume polishing, AI-facilitated job search, message filtering, AI interview services for job seekers. Okay. So they help you find work in China. Okay. All right. Never heard of this company. They're communication services, internet content, and information. Market cap $8.8 billion. Okay. Revenues growing at 12.7%. Forward P of 15. Analysts think it's discounted. The 1 year, it's up 25%. And Chinese stocks have been doing well. They've been doing, for the last 12 months, doing, like, if you compare the Hong Kong stock market versus the S&P, it's outperforming it by a pretty good margin. This one here is up 25% over the 5 year. It really had a correction, and now it's beginning to rally higher, but last couple of months have been a downward slope. So this is in the Chinese currency. It's going to be about 0.14, but the dollar has been losing value. I don't know if that's changed, but we'll go with 0.14. So the revenue here, so that's going to be about $1.3 billion, $1.350 billion of revenue, growing at 12.66%, which isn't incredible growth. It's okay growth. But for a company that size, it'd be nice to see it in the 20s, 30s, to be excited about the company. And free cash flows there. So again, this is in the Chinese currency. So let me go to this view, and stock analysis will convert it to dollars for me. So free cash flow of $479 million. pretty good. They have almost no debt, $2.7 billion of cash. So you're getting $2.7 billion of cash from a market cap company that's a little over 8 billion. So it's a pretty good cash pile. These guys will value well. I think they're discounted on cash flows. The forecast for these guys, let's take a look. Analysts think it's discounted. It's been selling off for the last couple months. And in 2026, they're supposed to grow 13%. That looks good. So for Q4, they grew at 16.5, 17.46 for the first quarter of 26, 17. These numbers look good. Looks like they're going to be doing well if they come in within that forecast. I think the stock's looking good. Now, this is a Chinese stock, and it's higher risk, but I think this values well. I've been buying more into China. I think it's a good idea. I don't know if this is a good idea or not, but let's look at the charts. I'll turn it over to Daryl.
Yeah, so they've been on a downtrend since September. They're trading below all of their averages. So the 5 days decreasing, and they're trading below that. 21 days decreasing, it crossed below the 200. The 50 days on a crash course for the 200. So I'm looking back here at prior support, and I'm thinking somewhere between about 1760 up to about 1825 is probably where they might find a little bit of support. That's where I would start looking at them. The RSI is really poor. The PPO has been really poor. Money flow has been negative. Even when money flow was positive here, it really couldn't find much strength. So I would wait on this one. I think you're probably going to find some lower prices the way the averages are moving. If you're patient, you can probably pick it up a lot cheaper if it's one that interests you.
If I could ask you a couple of questions here. So it being a Chinese stock, does it change any of your process?
Not as far as charts go. It would definitely change my investment process, but not the way it trades on a chart. It doesn't matter where the company's founded. The charts all operate the same.
I use a higher discount rate because it's just greater risk to me. Chinese stocks trade at higher discounts. This one most definitely is discounted. The analysts are saying it's discounted by 37%. I'm going to agree with that. But man, Chinese stocks for the last 3-4 years have been hard to predict. And they've been on a win streak for about a year and a half. If that win streak continues, this one could really work. The other thing I've noticed is, the U.S. is operating geopolitically a little contentious, right? With tariffs and so forth. And I'm not an expert on China, but I do read stories like the Prime Minister of England is in China right now, visiting China. Canada is forming, I guess, closer relationships with China. Latin America they already have good relationships with China. So it seems like China is making a lot of progress around the world, selling their products, and they're doing really well. They're selling a lot of EVs. They're selling solar products. They're rare earths. Back to stocks in China. I think that's why I'm buying more Chinese stocks. I'm not loading the boat with them. I own Alibaba. I own Futu. Started buying into the small cap. I own an ETF. but I am, buying more in moderation. So good luck with this one. Interesting one. It's a little too small. Uh, I don't know if they're going to do well or not. I don't know how to compare them against their peers, but it's an interesting stock. Thanks for asking about that one, Ben 10. And it looks like Mike has made it on the stream. Let's see here. So you're interested, man, you want to talk about software stocks, and it's a rough day out there. A really rough day for software. Dave has not been trading higher. I had a really small position. Wix was doing well yesterday. Wonder what happened today. CRM and Path. So CRM is getting destroyed today. I don't know about Path. And we can thank Microsoft for the big sell-off in software. And Jan, I had already put Vic on the list. We'll take a look at that one. That's worth taking a look at. And Ricardo, you want to look at Visa? MasterCard was doing better than Visa. Let's take a look at Visa. All right. Okay. I think I'm caught up there. So we'll move over to Amazon. And Pierre wanted to look at Amazon. I think it's a good idea. So this is one of the stocks that I deal with it qualitatively more than quantitatively, because culturally Amazon will sacrifice its financial statements looking, very good for the current quarter. They're willing to sacrifice that to establish themselves as the big long-term winner. And some pieces to the business are incredibly powerful. AWS, the last quarter they announced was a very good quarter for AWS, which is their cloud business. And their e-commerce business is just getting more powerful every year. And they have a bunch of little pieces too that look great, like their streaming business, awesome. They advertise on their streaming platform, great. They advertise on the e-commerce platform, awesome. So Amazon is just loaded. So qualitatively, I arrive at the decision for me is that I'm loading up on Amazon. Amazon is currently how much percentages? So Amazon is 4% of my portfolio. Google's 11.6, Meta's 11.5. And I'm not going to stop buying Amazon until I'm like at 8% of my portfolio. And I hope that the market helps me by having the stock rally. We're going to have earnings next week. I bought more Amazon today, and I'm going to be buying Amazon until I get to basically doubling my position. The position size right now is fairly big. It's like 120, 130,000. Let's see, it's not showing it there, but I can show it here. $119,000. So I want to double that, because when I deal with bigger companies, and especially companies that I really know, higher level of confidence, conviction, comfort level, right? So it's going to be a big position. I'm comfortable with that. And I think they are in command of e-commerce.
Victor, I don't know if it was me or you, but things froze up on your end for about 5 seconds.
Really?
You might want to. Your hand was up in the air and just stuck there, so you might want to step back a paragraph.
Well, I was saluting you, sir.
Okay, there you go.
Am I okay now? Am I coming over?
Yeah, you're great now. It sounds fantastic.
Right. Maybe Maybe Google didn't like me saying so many good things about Amazon and it froze me. So Amazon, just qualitatively, I arrive at, I want to own Amazon more. And I understand them culturally that they're not going to, really uh, spruce up their financials just to have a good quarter. That's not who they are. So when we look at their growth, 11% on a massive business, almost 700 billion, they will be a $1 trillion revenue company. There'll be $1 trillion of annual revenue in 2028. Look at this growth. By the time they hit this number, their revenue will grow by more than $100 billion on the top line. $100 billion company is a big company. Every year they'll be adding a big company to their overall, revenue mass. That's huge. Look at the profit. So I'm buying here because I don't think Amazon should ever trade below 25. It should trade between 25 and 35, depending on the market. And it's going to be one of those bets that I make. I value Amazon. It's discounted. As we go into the earnings next week, what am I looking for there? AWS. AWS, if they show a continuation of the growth that they had last quarter, the stock's going to go. When you cover the charts on Amazon, do you already have the implied move?
I can look that up real quick.
That'd be awesome.
A second.
Because in my opinion, I think last time Amazon rallied like 10% higher or something. And I expect the same thing, especially since we're having such a down day and it's been kind of a mixed week. I think Amazon can really have a good day. If the Amazon business comes through, that definitely can be there. And the advertising business. Those two businesses drive a lot of profit and they could really move the stock. The AI stuff, you get it for free. They own like 15, 20% of Anthropic. They're doing physical AI in their robots, but they don't really talk about it, and it's just included with the company. So I'm a big believer in Amazon. I'm going to be investing in them, as mentioned. Hopefully, most of what I said around how I plan to invest in them came through. I think right now, as I speak, it's discounted by 27%. That can improve if their growth on AWS improves and they kick out more cash. They have been consuming a lot of cash to build out the data center. So we'll see what happens next week. Over to you, sir.
So the implied move is 7.6% right now. And whenever we talk about a company like Amazon, I like to really step back. And this is 20 years worth of data. And they just do what they do. So they've been in this 20-year trend channel. They are below the midpoint. So, anything here is probably a good place to just keep plugging dollars into Amazon. I mean, even if you bought when it was way extended, you're still up. So now let's take a little closer view. So this is 5 years. And, I take that back. 5 years worth of data, but only 2.5 years trend channel. So they have fallen out of the trend channel. This was all the tariff stuff, and they're just kind of chugging away here. It's going to be a while before they get in this shorter term. trend channel, but if you get worried, you just go back and look at this one again.
Mm-hmm.
So let's go into 1 year. And they're pretty much just consolidating and have been since August, just trading sideways. We haven't seen extremes in the RSI. It does get below 40 occasionally. It does get up near overbought. That was right at earnings. So they're just doing what they do at the moment. This to me would be a good time. Just you get paid every 2 weeks, buy every 2 weeks. There
Yeah.
is a little bit of resistance up here, but I'm not terribly worried about that in the longer term.
Yep. And these guys, Amazon's, it got, so much leverage in our economy, in the US economy, right? They're bringing a lot of the deliveries in house. Now, why is that? They're consuming a lot of cash to do that, by the way. They're hiring people and so forth. Is because they want to live in a world, which I happen to be in Southern California, so we have 2-hour deliveries. It just blows my mind when I order on Amazon and the stinking product shows up in a couple hours. I'm like, just wow, that's incredible. That's what they're aiming to do. Is they're going to be so part of like everyday life, that Amazon's going to be a big fraction of, or big percentage of our home budget. Like, okay, just get it on Amazon, get it on Amazon. It's so convenient. Even though I want to share the wealth and maybe shop at some other stores, I'd rather save time and just get it at Amazon. So they've been doing that. So that's been consuming cash, and the market, in a lot of investors don't like the fact that their cash isn't as good as it could be. The AWS business is consuming cash. It's consuming cash to build these data centers. These data centers are expensive. But once they get done building, look out. They're going to be a force that cannot be matched. Their e-commerce business, if they have 2-hour delivery to, let's say, 70 or 80% of the population in the US, who's going to be able to compete with that? It's going to be really hard. They're just going to get more and more market share.
Yeah,
And I think,
looking at. Oh, I'm sorry. Go ahead.
Go ahead. Finish your thought.
I was comparing the mega cap stocks, just looking at their capex. I was specifically interested in Meta because they're spending 34% of their capex to revenue, and capex to operating. They're spending half of it. Amazon is a little less on the revenue because they make lots of revenue, but their operating cash flow looks like it's consuming the majority of their.
Yeah. And the margins are very different between Meta and Amazon, right? The e-commerce business on the Amazon side is low margin compared to Meta. Exactly. That's a very good table, by the way. It really speaks to it. But once they pull away from having to invest capex and you let that cash flow to the balance sheet, it's going to unlock a lot of value. So that's a pretty good review of Amazon. Looking forward to it. I think I'll have time next week to do a watch party. And if Daryl's up for it, I'd love to do a watch party with him. This week I've been really busy, so couldn't do the watch party yesterday. But maybe next week. Next week we can do a watch party for Amazon. And there's going to be Amazon and Google on 2 different days. All right, so that was Amazon. All right, so Jan brought up a stock I've never heard of, VIK, Viking Holdings. Oh, okay. So you were joining the. So Viking Holdings, they do cruises as well, right?
Yeah, they do the river cruises.
Yep, there it is. Yeah, I've got that river cruise in my bucket list too, by the way. Go see the glaciers and then go do Europe on those small boats. That'd be cool. Look at that. Viking up 49%, 206%. Jeez, man, these companies are making money. And the revenue, look at this growth rate, 20%. It's not the biggest company we're going to come across, but that's really good growth. In 24, they grew by 13%. 25 year to date, growing at 20%. Looks good. Viking looks like a winning stock. And their forecasts, what are they expected to do going forward? Continue to grow. And I think cruises, with I know in the U.S. we've got a lot of folks that are retiring and are probably more agreeable to a cruise versus an adventurous vacation. That's you have to exert yourself physically. So it fits with the population and probably what they like doing. So that is Viking. Looks good. I think we kind of covered the travel stocks quite well today. We'll skip the charts unless you want to show them, but we'll skip to the next one.
Okay.
All right. Well, enough fun and games. Sorry, but I'm going to throw a wet blanket on our live stream. I'm going to talk about software stocks. We've got Monday.com with its subsidiaries develops software applications in the US, Europe, and Middle East. And today it's down 9%, just getting beat up, down 56% for the 1 year. Whew. It's been brutal. And you see 56 down, and you think, okay, the revenue must be contracting and profits must be contracting. The business must be under some kind of pressure. Revenue up 28%. Okay, that's pretty good looking there. Profits are expanding. So this company is $1.16 billion in revenue, growing at 28.6%. The quarterly showing good growth at 26%. So it's growing really well. Real profitable. Real nice at 89% gross margins. They're smaller, younger, so they're not quite hitting on all 8 cylinders with regards to profit margin. As they get bigger, more mature, I think their profitability is going to do better. So overall, this is a really good looking stock based on its fundamentals. Really good free cash flow margin. This stock's discounted all day long, but the market is selling off. Look at this discount, 122% discount. The market is selling off software stocks, even though analysts are stating, 28 of them, hey, this company is going to keep growing 21% in 2026. They're going to expand their profitability, and they're going to keep it going for years. Market still is selling off these stocks, and our friends over at Microsoft didn't help the situation because in the Microsoft earnings, they're showing that they're all over this Copilot and how they're forgot what they called their platform, but they have an AI platform where you get to design, in essence, some agents. And in a way, you could kind of imagine that, well, great, I could do more with that AI stuff, those AI functions, probably not need as many people and not need as many Microsoft licenses. So it's like, okay, guys, you're kind of cannibalizing your own business. So that's Monday.com. It's discounted. When are they going to announce? February 9th. And all these software stocks we're going to look at, they're discounted. It's really a special time in the software space where I'm looking at these discounts going, wow, never seen it like this. I've always, for the last 20 years, I had to pick my spots when to buy software stocks because they'd always be priced, close to their fair value. So I had to be patient and then buy them at the right time. Now it's like, geez, you can just about look at any stock and it's really discounted within the software space, Monday being one of them. When is the market going to start to rally around these stocks? I think once the whole AI threat towards software companies gets resolved, defined, we know what's going to be hurt and what's not going to be touched, that kind of conclusion. Or maybe just if Monday.com keeps growing and 2 years from now, finally the market's like, AI isn't going to do anything to these guys. These guys kept growing, even though AI's now kind of become something that we all understand. So that's where I'm at with Monday and software stocks. What are you seeing on Monday, Daryl?
It's ugly.
Oh, man.
So we've been in, we had a 3-year trend channel going, and then they basically fell out of it way back in August, and they've just continued on a steady downtrend. So I sold out of this when I said in one of my videos I was going to close it out. I'm going to share my transaction analysis because this I only had a few shares, but I can look at my trade and say, okay, I stepped out of this one at 38% loss, but was it the right thing to do? I can scroll down here because this keeps updating. My cells are locked in when I sold them, but this price continues to update every single day when I open it up. Had I not sold it, I would be at 44% loss right now. So even though I took a loss and it wasn't fun, I can look at that number and say I made the right decision. Because it is not turning around anytime soon.
Thanks, Daryl. Yeah, it's, the AI trade, it's been going for a while, obviously. And it has, going in my time machine 3 years ago, I was really trying to get my head around the whole AI trade. And did I think NVIDIA was going to go up 837%? No. Broadcom, I owned Broadcom for part of this. No, I didn't think it was going to go 455. And could I imagine a world where these software stocks were just going to be idle at best? Adobe's down over the 3-year. No, that's just not a world that I could put together because the fundamentals tell me a whole different story. But the market's going to do what the market's going to do. And the market has flourished in semiconductors. And that's been the big story. And some other side stories have been, some successes at Meta. I've owned Meta through this whole time. I've owned Google through that time. And I think that this is overdone. I think that semiconductors are priced too high. Market can continue to go higher. It could go higher for another 2 years. But I think at some point, those will go revert back to what I think is going to be. I like the chart that Daryl showed on Amazon, 20-year chart, right? Okay, there it is, 20 years. Well, all the companies here have been around for 20 years. This space has been around for 20 years. And right now, I can't think of a time when they were this valuable or this percentage. I don't think they've ever been this big of a percentage of the overall market. Well, I think over time it'll revert back, but we'll see when that happens. They've been working to this point. All right. So Ricardo wanted to look at Visa. And Visa, I think, is having a good day. Up 1.66% over the 1 year. This one here, I did an analysis on it probably around here and thought, boy, this might be a good idea to invest in. And boom, it popped up. And now it's come back down. And now it's beginning to rally again. They're a steady growing company, 11%, really high margins because they've built this big network of basically where we get to use our Visa cards. They don't have to build it again. They just build it once and then they charge for participants to use it. So 11% growth. It's been consistent for 3 years. The gross margin's 97.77%. One of the highest gross margins that I get to see. Profit margins, 49%. Looks really good. Visa right now is discounted. Will they be disrupted at some point in the future? The 1 year, it's flat. 5 year looks okay. That's what's interesting about this stock is for a while, it was really just doing great. But this past year, it's pretty much consolidated. It's stalled. Looking at the forecast, it's expected we're in the year that is going to end September 30th, 2026. They're growing at 13%. And judging from how many people are traveling, the economy's in good shape. I think the consumer is going to spend more using their Visa cards. So that looks like a good growth number. Their forward PE, 25.49. Profits are expanding. Their net profit. So that looks good. And I've got a valuation on Visa. Discounted by 20%. Not a big giant discount, but I think it's a pretty safe bet. I think it'll return a good, good appreciation to an investor. It's not a big risk. It's just going to consistently keep growing. So that's my review of Visa. What do you think about Visa, Daryl?
Yeah, I'm looking at 20 years worth of data here in FastGraphs. I only see one contraction, and that was in 2020. Other than that, they just grow and grow and grow and grow. So we only see the one dip in earnings right here. Other than that, every single year is up. So especially if you're a young investor, I don't know how you can really go wrong with this. It doesn't really fit in my portfolio because I need to generate more income. So this one is, not in my portfolio, but just look at that and tells you it's a pretty safe stock. If you're young, just keep plugging away in it. We look more recently, they are trading below their 200-day that is slightly rolled over here and leveling out. The 50-day is under the 200-day. The 21-day is crossed below the 200 and the 50 and is trading below the 21-day. So it's not a bad place to pick it up. You see the other chart that's 20 years long and 1 year of earning contraction in a pandemic. And other than that, they just grow and grow and grow. The RSI, it crossed above the 40 line. We don't quite have a buy signal on the PPO, but sometimes with a company like this, you just buy it anyway, especially when it is trading below these major averages.
Yeah.
So, yeah, if you're young, I would definitely have this in my portfolio. It just doesn't fit mine. But for a young person, this would make a whole lot of sense to me. I don't know
Thanks.
what their dividend growth rate is. Let me take a look at that real quick. Yeah, so look at that growth rate. So you buy it now at the 0.8%, but they're growing at 14% every year.
Mm-hmm.
So from a dividend growth perspective, that's what we would call bomb diggity.
All right. Thanks, Daryl. So to finish off, let's talk a little Apple. Apple's going to announce their earnings in roughly an hour, and it's one of the big caps. They are doing okay for the 1 year, up 8.43%, pays a tiny dividend. Over the 5 year, it's been a good stock. And of course, if you bought Apple way back when, you're doing great. Going into the earnings call, let's see what analysts are expecting from Apple. It's this quarter that's being announced, and man, this number looks pretty healthy. 13.64. When did Apple start growing? I did not get the message on that. That's pretty good growth. This is a big company. So I guess iPhone sales have been good.
Yep.
And this is really good looking right here. And I imagine Apple, if they come through with these kinds of numbers, it's going to rally tonight. What's the implied move on Apple?
Let me calculate it real quick.
Just my guesstimate is Apple can go higher 5 to 7%.
So they're reporting tonight, you said?
Yeah.
Okay. So 6.25 plus 4.78 divided by 260. 4%.
Okay.
4.2%.
The numbers look really good on their estimates. I mean, this is really good growth, and they're going to follow it up with 12% growth, so that's looking good. Almost 8%, and then 10%. Looks pretty decent. Looking at what's my valuation on these guys? I don't know that my growth rates are correct on my valuation of Apple. Yeah, this isn't good enough there. Yeah, I'm still not there on the valuation. But maybe tonight it'll change. We'll see. We will see. All right, guys. So that is it. Any last thoughts, Daryl?
No, not particularly. I think
All
we
right.
talked about everything.
Yeah, thanks for joining me. Really appreciate it. It's good
We
to connect.
did miss a couple tickers though
Which ones?
that somebody had mentioned. HDB and
Yeah, Ben 10.
LI. Did we cover that one?
No, we didn't. I just
Okay,
thought we
all
could
right.
I needed to get going, and
Okay.
I covered at least one stock for each person that
Okay.
nominated them.
Okay.
And we covered a total of like 10 stocks.
Okay.
All right, perfect. So looks like the market Meta's holding on to its gain. IBM had a good day. And again, these big banks, MasterCard doing great. looks good. And then Energy, look at Energy. Wow. Exxon, go Exxon. And Progressive had a good earnings. Progressive Insurance has been rallying higher. And that one was kind of had a rough, call it year and a half, but it looks like it's making a comeback. Progressive was kind of like the star of the show within insurance stocks. Maybe it's trying to get back and be like, either number one or near the top of the best performing stocks in that space again. All right, perfect. Well, everybody have a good night. Good luck with your stocks in the after hours. And again, thanks a lot, Daryl. I hope you have a good night.
Yep. You too.
All right. We'll see you
Take
guys.
care, everyone.